from London. Welcome to the RANsquawk European morning briefing for today, Monday the 10th of October. Hope you've had a great weekend. Firstly, starting off with the general risk-on sentiment in the Eurozone today, there has been lots of focus on the developments between German Chancellor Merkel and the French President Sarkozy yesterday evening, noting that they are to put forward a plan regarding bank recapitalisation before the next G20 summit meeting. That's at the beginning of November, so they've got about a month to whip through these plans, and it's estimated by IMS Borges recently of around a €200 billion injection of bank recapitalisations, which is rumoured now to be taking place. So that has helped risk sentiment. We've also seen out of the Eurozone data in form of the German current account and trade balance coming in higher than expected, and distinctly higher Italian industrial production data, which has also helped buoy sentiment. In recent times, we've also had Fitch affirm France's AAA rating and Belgium's AA+ rating, with Moody's French head also affirming France's AAA rating, so that's helped buoy risk sentiment. And out of Russia, there's been some comments from a presidential aide noting that the country is willing to support particularly Spanish debt. So all of this helping risk sentiment across the board. Just a couple of things worth noting on the downside. There is still some market focus being paid to the Fitch downgrades of Italy and Spain at the back end of Friday night. Alongside, there has been a think tank, or comments from the head of a European think tank out of Brussels, noting that the EFSF, if it is enlarged to around the €4 trillion mark, which they, in their opinion, recommend, France's AAA rating may come under some selling pressure, or there may be some pressure on France's AAA rating if the EFSF is increased to around that €4 trillion mark. But generally, we are positive across the board. The dollar index is being the biggest loser today, currently trading down around 8% on the session. That's helped support the dollar-related pairs. In particular, Eurodollar trading up 2 points today, also seeing Aussie dollar trade up over 100 pips, and cable being supported on the back of that as the dollar index has weakened significantly across the board. Just keep an eye on the fixed income markets, bunds taking out some stops after trading below 135.00, and we're also looking to see some further downward pressure after the triple heads and shoulders neck mark has been taken out of the downside in bunds, and also the US 10-year trading towards and breaking Friday's lows to the downside. Just keep an eye on the 10-year government bond yield spreads. As noted, Italy and Spain wider on the day, with the French spread over bunds starting to widen given the latest regards or comments regarding France and their jitters over the AAA sovereign rating. However, just as noted, we did see them recently affirmed by S&P and Moody's French head. Looking forward into the rest of the session, we're also looking out for further comments from Slovakia. The Parliamentary Budget Committee has recommended approval of the EFSF amendments. That's due to take place, the vote in Slovakian Parliament tomorrow, despite the misgivings from one of the minor junior coalition governing partners, the SAS party. It does look like the final hurdles for the EFSF will get approved there following the ratification in Slovakia tomorrow, so just look out for that. However, in terms of today, it is Columbus Day holiday in the US, so there won't be some thinner trading volumes despite the markets being open. No data scheduled for release out of the US session. Market participants just looking further ahead and looking out for any further developments regarding Eurozone banks. No other key data scheduled out of the Eurozone. But that's enough from me. Have yourselves a great trading day, and we'll have another update for you at the midpoint of the US session.